Catherine Austin Fitts is the president of Solari Inc., and we hope she can provide some insight into why we're in this mess. Ms. Fitts served as managing director and member of the board of directors of the Wall Street Investment Bank, Dillon Read and Company, as well as Assistant Secretary of Housing and Federal Housing Commissioner in the first Reagan administration. Welcome once again to the INN World Report, Catherine.
Thanks, Lenny. It's great to be back.
Catherine, you have been predicting this for a while. Let's see where it is right now. Is this as bad as it's going to get?
This is the beginning of a major shift of capital out of financial assets and a financial and debt bubble, and back into the concrete economy. And what we're seeing, Lenny, is really the very beginnings of this shift.
Now, you talk about the firm Dodge and Cox in one of your most recent writings.
Right.
And tell us a little bit about what you wrote about them.
What happened to Dodge and Cox on the Fannie Mae and Freddie Mac were taken into a federal conservatorship in earlier in this month, and as a result of or the authority was created by a bill passed this summer, the Housing and Economic Recovery Act, and literally the failure of Fannie and Freddie is a wake-up call to a world of people responsible for managing retirement savings and institutional capital, that there is sort of a deeper rot at the system, because Fannie and Freddie were, as I describe in my blog, if you want to read the article, were not only had a monopoly position on securitizing the U.S. mortgage market, but also had indirect access to the federal credit. And so literally, if the company was legitimately managed and run, it was really impossible for them to go under, even in a very serious housing recession, if not depression. So the fact that they did is indication that a lot of the allegations about corruption in the mortgage system and in related derivatives, is true. So this was a wake-up call, and it's an example of a wake-up call that a lot of money managers and investors, large and small, are getting in the last 30 days. The Lehman bankruptcy and the need for a Fed bailout on AIG just continue that message, and so people are beginning to realize the problem is not a recession or just the end of the debt bubble, but in fact inside this bubble is a great deal of financial engineering, which is standing on nothing in the real economy. And so we're literally watching a paradigm shift, and it's just the beginning, because remember, things are being held together until the election. And if you look back at the last housing bubble bust in 1988, again, we were in a presidential election year. Things were held together until after the election and the inauguration, and then, pardon the expression, all hell broke loose. And so if we just layer on that kind of schedule to this year, we've got an election and then an inauguration, and we literally are going to have a new president walk into the Oval Office and find themselves in a financial prison. And shortly after they land in financial prison, we have 2 more months before the tax dates, and then the slow time in the summer, because remember, typically in a recession, the economic activity slows down and the incomes fall, and then the housing recession begins. So the next leg of the housing recession has not even begun. This time, the housing recession is leading because we had a bubble with lots of activity that made absolutely no economic sense. So we have a lot to digest as a system and a country, because when you have economic challenges that are this profound, Lenny, you're facing not just this is not just a regular cycle. What we're having to face as a society is that we have a non-sustainable culture and economy. We have to change to a sustainable one, and we have to do it while managing the geopolitical issues that come from having basically burnt your creditors pretty seriously. So it's not a pretty picture, but the time has come to change. And the Fannie and Freddie failure was a wake-up call that the change has begun and it's time to shift.
Now, you're talking about the next administration taking office in January. They're going to have to make some pretty big changes, as big as the kind of changes we saw in FDR's New Deal, or is this going to be something smaller? And are we going to be able to keep free market capital going forward the way the investor class certainly wanted to see it?
Well, we have not seen free markets for a long time. Part of the volatility you're watching in the market comes from an economy and regulation and market management or manipulation, depending on what you call it, which has become more and more centralized. So we are watching the central bank and Treasury actively intervene daily in the financial markets in a way that bears much more relationship to the economic management in the Soviet Union, 10 or 20 years ago than anything having to do with free markets. So we're watching a highly politicized, a highly politically managed economy. And as you can see, the corporations run the government, but meantime they're defaulting back into the government. So it's an interesting integration of public and private. So this is a very new picture. In 1929, we didn't have high-speed digital technology. We didn't have globalization. So we're looking at a very different picture. And if you want a model of what the worst case here could look like, you want to look at the countries who have dealt with collapsing debt bubbles or economies who've been managed and engineered by the global governance system, the IMF and the World Bank. So you want to look at what happened in Latin America or Russia, because we are coming into a very similar kind of construct.
On Sunday, the Federal Reserve Board announced, let's just say, a relaxing of standards, and they call it initiatives to provide additional support to financial markets, including enhancements to the existing liquidity facilities. What does this mean?
The Fed and the Treasury, working in concert, are taking on more and more responsibilities to loan money and in the process take much more liberal, or they're using a much more liberal definition of collateral. So we have the Fed making loans to the likes of, private investment banks and insurance companies. We have the Treasury going into do auctions to lend money to the Fed. So there's kind of a synthesis here. And they're taking back as collateral things where there's tremendous question about what their value is or whether or not they really have value. So we're literally watching a backdoor bailout that is remarkably liberal, and we're using global resources to do it. It's very important, Lenny, for the average investor to understand that at this point the U.S. Treasury has as its value, as its creditworthiness, not any fundamental economic value, because if you look at the total debt of the United States versus its resources, we're not standing on fundamental solid economics. Instead, what we're depending on is our military power and our ability to force people to buy securities and currency that are steadily going down in value. So we're talking about an economy which is based on force, and the ability of our ability to hold a gun to people's heads as opposed to any kind of true economic value. And that is a very big shift from where we were 20 years ago.
When did you see this shift first beginning in the rise of U.S. military power and that being part of our economic strategy?
Well, the big shift started in, after World War II, and this is what Eisenhower tried to warn us about the military-industrial complex, because one of the jobs of a financial system is that when you behave badly, your bank will shut you off and investors will shut you off. And unfortunately, what we created in this country was a financial mechanism where we could continue to borrow money no matter how unproductive or terribly we behaved, because our military might and our weaponry and our intelligence capability was awesome. And so, we've ended up with our core competencies being, visible and invisible weaponry and force, and the ability to print financial paper. And the combination, unfortunately, has caused more and more people and more enterprises to stop doing basically useful or productive things and end up doing all the kinds of things that have gotten Lehman and ANG and everyone else in trouble. So the $64 question is, how in the world are we going to get a global feedback loop that encourages people to do something productive? Because otherwise what we're going to have to do is move to a war economy and war culture, which is pretty unattractive, and the big question globally will be, who's going to get killed or raped this year so that the system can keep on going.
Now, that would mean that Admiral Smedley Butler, 50 years ago, when he said he was tired of U.S. military force being the enforcement arm of the corporations, he was predicting the future.
Well, think of large corporations, and I don't mean all large corporations, but most large corporations are dinosaurs. They're so large and they have such healthy appetites that they destroy the environment of wherever they are. And so the question is, are the dinosaurs going to destroy the planet, or is something going to happen so that we come back in some kind of eco-environmental balance?
Well, let's get back to our small investors. Is there anything you could tell them, non-official of course, that would be a safe investment, generally speaking, of course?
Well, there are lots of different areas of opportunity, and one of the things, the thing to understand if you're an investor is, first of all, you need to know where your money is, where it's going, and what it's doing. Because if your money is going and doing something that is fundamentally not sustainable, like complex financial engineering, as opposed to, doing something useful like running high-speed trains, you're going to lose your money. So we need to get out of the bubble economy, and we need to get back into real things that we understand and which we know are useful. And so sort of the rule number one is let's get out of la la land and back into the real world. That's number one. Number two is you want to be associated with enterprises and places that are both competent and have integrity, because when you do business with enterprises that behave like criminal enterprises, ultimately, unless you're an insider, you lose money. So part of what we're watching go down are companies that have a reputation for behaving in questionable ways, and when you finance organizations that behave in questionable ways, then it's not surprising that they behave in questionable ways towards you. So that's kind of rule number two. Number three, place matters, Lenny, and if you're gonna put money in the bond of a government, then you want to be part of a government that runs its government and is part of a civilization of people that act like adults. So there is such a thing as bad behavior, and you need to start relating to places that are grown up and conduct their economies as if they're grown up. Now, I have a new audio seminar that we've made called Positioning Your Assets for Growth in Uncertain Times, and what we do is we go through all the different areas of opportunity. The one we stress the most is the absolute importance of doing everything you can to simplify, lower your overhead, and become as self-sufficient as you possibly can, not only in your own life, but begin to network with people around you to do the same, because a lot of the risk in the economy occurs if I have to put my money into investments, get a high yield, and use that yield to go buy services from corporations which are untrustworthy. Their financial assets are untrustworthy, and their ability to deliver, for example, food without genetically modifying it is untrustworthy. Well, that's really simple. I need to stop being intermediated. In other words, why not just take the money out of the stock market, and if I'm in the right place to do so, do a community garden with my neighbors, or dig a well if I have that capability, or start to create capacity, finance a local farmer who's providing me with food. So there are 1,000 different things depending on who you are and what you are and where you have the capacity to do. But anything we can do to lower our need for financial income for the next year to 10 years is going to be very attractive.
Catherine, I'm afraid we're going to have to end it there. But before we have to go, we understand the Solari report will be available on video in the near future.